Hello, welcome to episode number 23 of the percentages number 2 that we are doing. In this episode, we'll be taking what we call the income tax. If you have been following the tutorial, we did a series on VAT, that is value added tax. There's a difference between the value added tax and the income tax. So the difference is clear. The income tax is calculated on salaries and wages of what? Workers. Whilst the value added tax is calculated on items or per se goods and services, if I may put it that way. So the income tax we are going to discuss is on the tax that every worker pays to the government on their salary. That is what we call the income tax. So what are some of the terminologies that we deal with when it comes to income tax? So let's look at some of those terminologies that we have. So I'm going to say that income tax, it is just a portion of a person's salary or wage, which will be wages paid to the government. It is deducted from the worker's salary before it is even paid to them. So it is not that maybe you take your salary and you feel like paying your tax. No, it will be taken from the source before the balance given to you. All right. Some of the terms that we are going to deal with is the gross income. What is the gross income? It is the total income before tax and other deductions are taken. So if you hear somebody says that my salary is 5,000, the person might not be taking home all the 5,000. If the person said that my gross salary is 5,000, you might not be billing him on 5,000. You'll be coming home less than what? 5,000. So after tax is deducted and other deductions, social security and all other monies will be deducted, whatever is left will not be the gross anymore. Then you have what they call tax allowance or tax-free income. There are portion of your salary that is not taxed. It is given to you free of charge. That is tax-free. We don't charge that part, or it is called allowance. So we don't tax allowances. That is it. So it's a part of the income that is not taxed. The portion of the income, just some certain amount of money that is being quoted in the salary that will not be taxed. Then taxable income. So you can see that the tax allowance and the taxable income combined together give you the gross. So there's a part of your salary. It is the part of the income that is what? Tax. There's the portion of the income that is tax. That is where the tax is being component is being calculated on. That is our taxable income. Then we also have what we call total deduction. We mentioned that other deductions will be taken away. What are the total deductions that are removed from the gross income? One, to say that your total deductions is the tax plus social security contributions and other deductions. Your social security, which is key that you are going to contribute, so that will be deducted. There will be other deductions, as in your union. You might belong to some union which you'll be paying dues. Those are also part of deductions that you'll be taking. And people might also go for loan. That loan deductions will also be part of these total deductions before your salary will be given to you. Now, what is a tax itself? Mathematically, not by definition. Mathematically, it is just the rate of tax multiplied by the amount to be taxed. Which amount? This taxable income. So what is the rate of tax? Then what is your taxable income? The taxable income is just the part of the income that we are going to tax. After the part that is not going to be taxed is taken away. All right. Then the net income. After all this is being done, the net income is your gross salary, the total income. So your gross income minus total deductions. That is what the money the person will be going home with. Your net income. That is what belongs to you. Okay. Then taxable income, as we already mentioned here by definition, is just what? Your salary or your income minus what? tax-free allowance. What is a tax-free allowance? The one we say tax allowance. Monies that are not taxed. Portion of your salary that is not taxed. All right. So this is just by calculation. This is by what? Definition. So taxable income, your salary. What is your income? Let's subtract the tax-free allowance. Then whatever is left become taxable income, what we can tax, where the rate will be multiplied by that amount to give you the component in terms of money. Then we have what they call take home pay, or your next annual income, annual, yearly, at the end of the year, from January to December combined together. That is what your take home pay, that is the net annual income, is your annual salary from January to December, all of them, all salary minus the total deduction. So the tax that have been deducted, social security, loan deductions, union dues, all of them combined together form total. Subtract it from January to December from the salary you receive from January to December. Whatever is left become the take-home pay or the net annual income. Then after doing that, how do you find the individual month money, which is called what? The next monthly pay. Your monthly pay after you know the annual is just the annual net annual income divided by 12. Remember, there are 12 months in a year. So you know your total yearly income divided by 12 give you the net on each month. All right. All these are just to set the pace ready for calculations that will be dealt with. You might not see all these terminologies in a single questions. 2 or 3 or 4 will be presented in a question. So the understanding the basics will lay more foundation for how we can solve questions. So I'll give a question on this, then we text the understanding of this. Okay, so let's look at this simple one. So a man on an annual salary of 250,000, that is yearly, the whole year, Ghana cedis, is allowed 86,000 tax-free. That's the tax allowance. So if he pays 2% of the taxable income as tax, we have to calculate his what? Income tax. You are looking for the tax. What is the tax? Remember, the tax is just the rate of tax times the amount to be taxed. What is the amount to be taxed? The amount to be taxed is the taxable income. And how do we find the taxable income? It is the salary minus the tax-free, right? So here we know we have the annual. Let me use income. You can also use salary. Annual income is given to us as 250,000. We also know the tax-free allowance as 86,000. So now that we know the tax-free and the annual, we can easily find the taxable income. So taxable income is actually the annual income or salary minus the tax-free. So this becomes 250,000 minus 86,000. Let's subtract that and see. So that calculation will be giving you 164,000. All right, so 164,000 is the taxable income. We are asked to find the income tax. So the income tax is equal to the rate of tax times what? Taxable income, right? So this means that 2% is 2 out of 100. So 2 out of 100 as the rate times the taxable income, 164,000. And if we do that multiplication, that will be giving you somewhere 3,280 Ghana cedis. So it means that in the whole year, the man will be paying 3,280 Ghana cedis in total. And you can as well find how much is paid every month by dividing this value by what? By 12. That will give you the individual tax he pays in every month. All right. Now, this is just to buttress the point that we have by the discussion in the beginning. I don't want to make the video that long, so come back for the next episode where we take another question that will rake in more of the terminologies that we discussed in the beginning. Don't forget to share, like, comment, and subscribe.